Wall Street is getting really concerned about Donald Trump. No kidding. The selling shows everything because Donald Trump is going all in on the tariffs and also cutting all the military aids to Zelensky. Now, this is no joke because this can go in big, as Warren Buffett now also been selling shares, is warning about the US dollars. So let's go into details right now. Now, again, disclaimer apply as usual and make sure you do your risk management. All right. So let's just look at the market. Now, the thing is this, Zelensky went to the Oval House and Oval Office, sorry, that we all know that he gave a very big verbal fight with Donald Trump. And obviously, end of the day, he even left the place we were having his meal because obviously there's no point continuing. And as a matter of fact itself, right, you can see the body language was terrible. He was not letting go. And end of the day, he was literally kicked out in a way after a heated meeting, right? So the thing is this right now, all media all saying that Zelensky should man the bridge with Donald Trump or even consider to resign. And obviously, Zelensky went to the Europe side and explained his views and stuff like that. And now Donald Trump is pissed off. He's going to say that, okay, suspending. He suspends all the military aid to Ukraine after the Oval Office blow up. And he thinks that this Zelensky really need to consider, or else this could be a World War III. So now if US start to cut away this thing, the aid, then it's just a matter of time. The other countries also cut their aid to Ukraine. And it's going to be very soon this war going to end. So what will happen next as well is almost unimaginable. So the thing is this, while he's doing that, Donald Trump went in and put on tariffs on Mexico, Canada, and including China. And this is crazy because we can see that the retaliation is almost immediately. All right. So we do know that what his reason for doing that because he really need to cut down the trade deficit. But the thing is this, the rest of the countries, they are all fighting back. As a matter of fact itself, right, we all know that the US 10-year curve has been inverted for 793 days. It's the longest inversion since 1924. And the last time when we see something similar like this itself, we lead into a recession. So what I fear most now is that it may be repeating exactly what happened, and now things will get very scary. Of course, one thing to note, we all know that whenever the inversion of the yield curve come in, there will be the initial jobless claim, right? So usually when jobless claim comes together, we will have that recession. So people are arguing now, Cal, there's no recession because there's no jobless claims increasing at the fast pace, so you don't need to worry about that. But are you serious? Because from the way I look at it itself, right, I think the numbers are not really clear because we can see right now the weekly jobless claim has jumped up more than expected. And we all know that, right, this is no joke at all. And it's increasing at a very fast pace. As a matter of fact, right now, Google has announced layoff in its HR department. We saw Autodesk cutting about 1,300 jobs. And we also know that this is about 65,000 workers is going to accept Donald Trump's buyout program. So there will be a sudden surge in the people being laid off. And of course, with more layoff coming from the DOGE, from this run by this Elon Musk, I think this will get very nasty. And in matter of fact, that's why now the Dow has tumbled more than 1,300 points in just 2 consecutive days. And we're warning this for the longest time. We told you guys that we'll be selling in February and March until probably late March itself. And one reason for that is because the market is getting worried about what's happening with the tariffs that is slapping across. And we know that China retaliated by basically also increasing 15% on some US stocks, our products, sorry. So because of all this itself, right, what will happen to the people like us? We will have to suffer because our costs will definitely increase. And this is not good at all. And of course, you can see that other countries are all retaliating and they're going to increase back on US side. So it's going to be a losing end for people like us, okay, retailers. So to me, there will be a conditional correctional move in this market. And we can see right now the S&P 500 is trading below the election day level. So now the thing is this, we all know that Donald Trump was a main driver of the US stock market, and now the market is trading below it, something we didn't see in this 2018 or 9 back then. So this tells you that people are getting concerned. So the thing is, you can look at this is the Vanguard, this ETF, and it's now trading below the 4th of November period. So that means that funds are all getting out from the market. And we're now at a very close, important technical level, which is the moving average, which is right here. And if this is going to break, I believe that the market may break down for S&P 500 to 5,665. Okay, this is possible. Target the S&P 500 could be going in the near term. All right, with that, we can see that the fear and greed index now is now at 20, which is a very low level. So we believe that there should be 1 or 2 more days of heavy selling, and we could look at a buyback in the market. And of course, we all know that Donald Trump say it's okay, little disturbance from the tariff is fine, all is good. But the question is this: can you really promise that? Because now he's saying that America will become rich again and be making America good. But when he's so confident and people are getting upset here and there, it's all right. I just have my doubts on this. As a matter of fact, right now we can see that the Dow Jones now is trading downwards, and I believe that 42,000 might be cracking down in the near term, where there'll be the first support level. But you're asking me, I think about 41,600 plus should be the technical level that the market will be observing closely, because that was where the market basically breaks the resistance to turn support. While the William indicator, we're at a very low end, but with this movement here, it actually represents bearishness in the market. So you can see right now, right, this is where Tom Lee actually came in to tell people that it's time to look for a buying opportunity. Now, he was kind of spot on back then as the market actually recovered. But the very next day, you can see the market actually sells instead. So this is actually not good at all. And now we can see it breaks below the level that he called for buy. So all these tells me that even Tom Lee might be wrong this time. And with that all in itself, right, we all know that Warren Buffett, who is old, but he knows his stuff very well. In fact, he is selling more shares. Look at it. He has basically cut down the Apple shares to 300,000 shares, but importantly, he cuts away Bank of America, right, 117,000 shares. And the thing is this, by reducing Bank of America shares, his second stake heaviest holding is American Express, which is a credit card facility. So is it like telling us that the company that he believes will be the credit cards, because we will be living on credit cards and people be borrowing from the banks, from this type of institution. And we can see that he increased also in OXY, and it's interesting over here. But you look overall, you can see he's cutting a lot, including Citibank. So it seems that he's cutting away all the banks because he expects the bank to work. And we all know that in the financial market, when the banks are not doing well, it will lead to recession. That means that he knows something's going to happen. Do you think so? So from where he's been deducting, it shows that he's selling shares, keeping cash. And we all know that Warren Buffett is very good at doing that because he always is ahead of the market recession. And that's where he will go in to buy big. So I suspect this will be the next move from him. So from the most recent shareholders, Berkshire Hathaway, this report, we all see that now he is kind of worried right now. He do remind his shareholders that they're still involved in shares, but they're kind of worried that, the current paper money valuation may actually evaporate. And the thing is that now he feels that the US has come very close to the edge itself, and the fixed coupon bonds provide no protection against runaway currency. So it's very clear that inflation will be coming in. It's very clear that there will be a pull in this jobs, the employment side itself. All these speak for itself. So that's why from here, we all know that US may be facing big issue in the next few months. All right, guys. So let me know in the comment box. Let me know what you think about it. This is Kel signing off. Take care and have a great day. Bye-bye.